to the Inspire Wealth podcast with Prof, where we dive into the world of real estate investing and wealth building strategies. I'm your host, Mallory Meehan. I'm a real estate professor, attorney, and seasoned investor here to guide you through the ins and outs of creating wealth through real estate. If you're looking to take your real estate knowledge to the next level, don't forget to subscribe to stay up to date with our latest episodes and offerings. Welcome to another episode of Inspire Wealth. I am your host, Prof, aka Mallory Meehan, and today I'm joined by Dana Dunford. Dana, welcome to the show.
Great. Thanks so much for having me today.
Awesome. Well, Dana, I want to know a little bit more about you and how you got into real estate and where your journey is currently.
Yeah, so it's interesting. I think a lot of people, their family came from real estate, owned apartment complexes, were brokers, agents. That really got people passionate about also looking at real estate. My family wasn't in real estate. My mom, a scientist, my dad, an engineer. So by virtue of that, like real estate and investing in real estate and thinking about it was so foreign to me. It actually was in 2010 when the market crashed, where obviously then interest rates went like so artificially low, but also prices were great. And so it was a great time to invest. I was at Apple, so I was in technology. Got a call. I'm really dating myself. That was 2010. But got a call from older sister and brother-in-law who were investing in real estate. And my brother-in-law's family at that was in real estate at that time, and so got exposure to, hey, you can invest out of state and purchase properties, and that's an alternative to investing in stocks. I also got a little bit burned because I remember in 2008, I was in college and I called my wealth manager, and he worked at Morgan Stanley. And I called the wealth manager, and I was always working in college. I was always busy. And I called and I said, hey, Facebook's IPOing. Can you invest? I think it was like $50,000 or something. So not a lot, but a bit of money. I said, can you invest $50,000 into Facebook? And one thing is like, if you're a wealth manager, you should probably be like, you should never have that much money in one stock.
Right.
Um, and so he did. And I think overnight, because it was just right when it IPO'd, the stock just obviously crashed. I didn't understand like most of the money was made in the private sector. And then once it went public,
Yeah.
it wasn't. And so I think overnight, like I lost, must have been like $30,000. And obviously, when you're in college and like you're paying for everything yourself and you've been working jobs since you were 10 years old, like that's a heck of a lot of money to lose.
Yeah.
And that was a rude awakening to me of like, hey, I need to control my own destiny and not have someone else control it for me. And so that's when I got really excited about real estate investing as like a much more conservative asset class where I'm not going to get rich overnight. Like it's not going to be $100,000 overnight, but I know if I put money in, it's going to perform and I won't lose $30,000 overnight, assuming you do it correctly.
Right. Right. Yeah. Wow. Okay. So I want to say it's a good story. I think it's a good learning opportunity because I think a lot of people, when they have those types of experiences, it really shapes where they're going. And without those experiences, they might not be where they were at now. So, you might have lost 30,000. Have you made back that in time and more, I would imagine, with real estate?
Yes, yes, definitely. And it's just one of those things where also I feel like I can control it so much more, than anything else in the stock market. So made that and more, but also just feel a lot more confident in my decisions with it.
For sure, for sure. Okay, so you said your brother-in-law was the one who kind of introduced you to real estate investing, and you decided to invest out of state. Where did you decide to invest, and what kind of asset was it?
Yeah, so initially Florida and Ocala, Florida. So it's a duplex. Actually, I think that was a good way to get started with real estate investing because one, I was looking for cash flow.
Mhm.
And two, I was also looking for a market where I thought that, hey, this will be pretty stable. Most people will say then go to an MSA with Fed Ed and meds, like, those three things. But I actually found it to be a good market from the perspective of it's right between Tampa and Orlando. And a lot of institutional investors are not there because institutional investors go just 45 minutes outside of like the MSA or like in that from the pinpoint. And so this was just outside of that I felt like the competition wasn't as much from that perspective. And then, yeah, and then I also look at markets just everywhere, helping manage rentals for others, able to see what performance they have and what the numbers look like.
That's great. So you focus primarily in the Florida market then, correct?
That's correct. So it's interesting. We work with quite a few people who invest in like 10 different markets. I'm a huge fan of like know your market and do one initially. There will eventually be a point where I'm in tons of markets, but at this point, focused on Florida.
Okay. All right. So your first one was a duplex. What were you getting as far as cash flow is concerned with that one? And was that a 2010 investment? At what point in time did you buy?
Yeah, so I invested, I think it was like 2012 or 2013 for what was it, 2015? Something like that for the first investment, one of those years afterwards. And it's interesting because one of the things that I've learned is you can do cash out refinances. And there's just a ton of different things that you could do. From a cash flow perspective, I think it was. So the rentals we're going for, we've increased rent on them and continue to, but I think that each one was going for about 1,000 a month. And I was bringing in, I think it was like $200 or something. I was also self-managing it, keep in mind. And so I think that helped with really the controlling the repair expenses, all of that stuff as well that goes into it.
So you were managing a property out of state, you're in California, you're investing in Florida. How are you able to find people to, conduct the repairs and know that they're done correctly? Like, how did that process work?
Yeah, well, I think today managing your properties remotely has never been easier. First of all, if you were sending out like a handyman or an HVAC technician, the tenant doesn't want you there with them. Like they know what the problem is. They will tell the technician. Um, I made it really clear that like, hey, you call our repair coordination line and you get approval, you tell them what's happening. Like the tenant is not going to be like, great, I need a new dishwasher, don't I?
Yeah.
Right? That should all come from our team. And so the first thing was like, hey, make sure you know the process with service professionals. The second is when they're out there, just tell them to snap photos and you can tell on the call if they know what they're talking about, break everything down into parts versus labor.
Mhm.
And you can do everything remotely. Everyone has a phone. You can even jump on FaceTime. You can look at pictures. So I don't necessarily think that you have to be there for that. I think historically things like self-guided tours were not as popular as they are now. And those types of things make it even easier to remotely manage your properties.
Yeah, for sure. I am curious to know kind of how you built up this team. So, how did you build up a team to know maybe who reliable service providers were in that market, and how did that process work?
Yeah, so I think just to kind of back up for listeners, Hemlane is a property management platform. And so we provide both software 24/7 services like repair coordination, and then also the marketplace of local service professionals for your repairs. Um, I think that a lot of reviews on Yelp, Thumbtack, Google can very much be about like how did you game it? And it's a good starting point though. So I think for us, we first started with our local agents and brokers would give us lists of vendors who are local. And then we would make sure they're licensed, make sure they're insured. and check out their online presence, because if they have really bad reviews online, you're definitely not going to use them.
Great.
If they have great reviews online, the question is, how good are they really? Then we would kind of benchmark them all against each other. So every time we sent someone out, we would look at price, we would look at quality, we would look at responsiveness, which is kind of part of that quality. And
Mhm.
then we'd look at the reviews. And so after sending out any service professional, we'd ask the tenant how they enjoyed working with the technician. We would ask the owner on the platform, me being an example, what they thought of the service professionals. And through that, it was really, we were able to build up our own review system in the back end. And my personal opinion is you don't need 10 handyman in an area. You
No.
need two ridiculously good ones who also have after hours, right? And that's what you need. And so building relationships with those versus everyone in the area was really part of our strategy. And there's towns where, Muncie, Indiana, where we may not have as many service professionals as we have in Denver, Colorado. But I think for us, very much building that up was important to us, and making sure that we were able to provide owners with quality service professionals and at a good price.
Yeah. Okay, so I'm going to take a step back. So we were getting into your first rental. Now, was Hemline already in existence at that point in time? Did you stumble upon it? Did you create it? I want to know more about this.
Yeah, we started Hemlane. So back in 2015, we started kind of phase one of Hemlane. It was background and credit checks.
Okay.
And the background and credit checks were for anyone who wanted to run them on tenants. And back then, you didn't have Zillow Rental Manager having free background and credit checks, at least for the owner. The tenant has to pay. And you didn't have a lot of these other services. So we started with that. So you'd advertise your property on Zillow or Zumper, or like Pad Mapper was popular back then. And then you'd come to us for the background and credit check. That was great. I mean, it was a great business to start and get my hands dirty on like actually building something, but it wasn't going to change the industry. For me, what I found is more people want to be remote. COVID really helped with that too. But they also want to know what's going on. They want 100% transparency with their rentals.
Right.
72% of rental owners self-manage their properties. And so the question is why? And I don't actually think it's the price of the property manager, it's the transparency that they don't know what's going on. And so we saw all other software built where it was like the property manager's in control, the owner just gets a monthly statement. And so for us, we really wanted to change that and have full transparency and control to the rental owner.
No, that makes total sense. So while you were building up this credit check and background check kind of system, were you also still continuing investing in in Florida?
So once I started Hemlane, I put all my money into Hemlane.
Okay.
So I think when you start a tech company, one, you have venture capital money, you have angel investing money, but you also have your own personal money.
Mhm.
And so for me with Hemlane, Hemlane was really the impetus to make sure that I was 100% into solving this big problem for everyone out there.
Mhm.
So actually I'm actually in Alabama right now looking for a property. I hopefully will close. I gave myself 30 days. Now I'm back to balancing investing and running the company. But at the time, no, when I started Hemlane, I was 100% focused on it. But I think in hindsight, like everyone as a real estate investor is like, shit, I should have bought more properties back then,
Yeah,
especially with where interest rates were. You're
right,
like, oh my goodness, I should have put more money into it. But at that time, I think from a capital perspective, every entrepreneur knows this. You don't have that much capital.
right.
You're basically living off top ramen and building what you believe in.
Exactly, exactly. Okay, so I want to know more about your thought process with the markets that you or your clients are investing in, because I think that's a really hot topic right now. And I know looking at Florida, is obviously, we saw a lot of migration there during COVID. It has nice weather. However, we are seeing increased insurance costs with that market specifically. And
Mhm.
so, give me a little bit of background as to how you go about evaluating an out-of-state market and how you help your clients evaluate what might be best for them.
Yeah, so and we don't help them with the purchase. We only help them with the property management side.
Okay.
But the advice that I would give to them is like one thing I've noticed is there's some sort of personal connection that a lot of people have to a market. And that emotional attachment you can is potentially not the best thing. But if you go and visit the area, investing there makes sense. What you need to do is just start with macro. What is the growth rate in population? What are the industries? If it only has one industry, there's very high risk there if there's only one industry.
Right.
Then you have to understand, what's happening with income in that area. So what is the average income and what percentage are renters versus homeowners? And you can do very simple calculations based on all of this to really understand, like, hey, is there, and then you can also look at housing supply to understand, like, what are the days on market in this area? Like, are there more renters than rental properties? So there's the macro. Then I think more importantly, once you have like kind of green boxes there, so much depends on the micro. And so you can buy a property, especially like in places like in Texas where zoning is different, where 2 blocks down is completely different than a current block. And so you really need to know the area. One of the things that I look for is honestly, an area that is like up and coming, just about to be gentrified, because if I can make the cash flow numbers work, very unemotional, just on a pro forma. But I also see that like, hey, they have a pet store, they have a healthy foods, but Whole Foods hasn't gone in, and they have like a yoga studio, like health. I can typically find that like, hey, Starbucks is probably doing the same research as us. Whole Foods is probably doing the same research as us. This may be a good area to invest in. And then I start looking on Zillow every single day. What are the number of applicants and views to properties versus what the property is? And then, hey, can I cash flow on this? And what does my cap rate look like on it? So I'll go through and in my pro forma, I have a Google spreadsheet. Um, I put each one on each tab, but then there's a summary tab that compares all the properties. And so then I can very objectively say, what does the cash flow look like? And then I can also make some assumptions on upside with appreciation that hasn't been built into the model,
Mm.
such as, hey, I do think this area is really high demand, really growing. A lot of people want to be in it. But I think some of that micro stuff is just as important as the macro. One of the things that I can't figure out is how self-driving cars will impact that, because I do think that more people may not live in certain areas if self-driving cars makes it so much easier to get from point A to point B.
No, that's a great point. All things that, I don't know that everybody is thinking about these things. So thank you for that. That was awesome. Okay, so I want to learn more about Hemlane and kind of what the services are that you provide and how people who are thinking about investing out of state can partner with you and work with you and, give me the details.
Yeah. So with Hemlane, we are a property management platform. We're built for you to manage your rental properties. We work with people who have one rental property all the way up to 500 plus rentals. The user experience is much more for people who have between 1 to 10 rental units, but there's enterprise features in there as well. As far as how it works, you can start with our starter package. It's free. It's literally software just to find and place a tenant, all the way to accounting to look how your cash flow is doing. And then we have software only packages that are paid packages. We have everything up to a complete package. The complete package will give you a 24/7 repair coordinator, will give you a rental assistant, all sorts of different things that you would need with your rental properties.
Yeah, because I think that with, new investors especially, they just don't know what they don't know. And
Yeah.
so, having something in place and being aware or at least prepared for the unknown and for not if, but when things go wrong, I think that that's
Mhm.
totally a crucial thing. So you now have developed partnerships with all different types of service providers. Is that correct?
Yeah, it depends on what market you're in. Kind of as a rule of thumb, if the MSA is over 100,000, we'll have a complete network for you. If we don't, you won't be able to choose the complete package. You can still use Hemlane, but you have to tell us what handyman, what electrician, like who you want to use, and then we'll call and coordinate with them.
Perfect. I love that. So Dana, I'm curious though, what does your current portfolio look like?
Yeah, so my portfolio, I haven't done syndication or anything like that. I know that's popular. Also REITs, I haven't done that. So I'm focused just on residential, purely and not focused on something more passive. I actually like the active role in part because of the tax benefits that it provides you. So I'd highly encourage you to like buy a single family home yourself as a starter to get started from there.
Love that. Okay. Any pieces of advice you would give to some of these new investors that are, they want to make the leap, but they're still hesitant? Anything that you could provide them that might be more comforting so they kind of know things that they should be aware of or things that they should look out for?
Yeah, I think the hardest thing is just to get started. Just block off time in your calendar on a Saturday. Start educating yourself, listening to podcasts like this, putting together your pro formas, tracking properties every single day and say, here's my buy box. If it fits this, I will go ahead and purchase the property and then continue to tweak your process as you go. But if you don't get started now, you'll always regret it in the future because obviously things will hopefully prices go up. We can talk about that and interest rates at a later point. But the best thing to do is get started today.
Yeah, no, that's perfect. Now, I'm going to backtrack just a little bit and I want to just
Mhm.
talk quickly about California, where you currently live, and kind of some of the
Mhm.
things that are happening in California. So, I think California, for a lot of people, is immediately kind of off of their buy box just simply because of
Yep.
some of the regulations and things. Tell me what your thoughts are on the California market and maybe ideas that people aren't thinking about.
Yeah, so I think in the California market, a couple of things. One, I wish tenant landlord law was easier. They make it so challenging for Californians who have quite a bit of money to invest here. And I think that that is actually adding to the affordability crisis here. I think it's really sad that the policymakers don't have an economics 101 degree and can't like think about this stuff. I also just don't think in any industry when you have a 50-page document that someone has to read just to understand the application process in fair housing, I don't think that that is benefiting anyone. That is not benefiting a tenant. That is not benefiting an owner. You need to make things simple in layman terms. You're a lawyer, you know this. And you definitely need to have the why behind things. I think the policies here that get put in place, there's one example of something that's one in a bazillion that it happens and then it becomes a policy and it's in legislation and I think it's really hard to retract on that. So I would be a fan of California saying, how do we reduce this amount of legislation? Let's make it fair to tenants. Let's make it fair to owners. And let's encourage more people to invest and build rental properties in California. The problem today is like if you have a multifamily, like a multiple unit building going up, it's never an apartment complex. It's never an investor for renters building homes for them. It's always for homeowners to own the condo units in it
Mhm.
because of tenant landlord law. And I think that's a shame and I think it's a disappointment. And I do think that who's making the policies here should really be called out on that because you could very easily look at how many apartment buildings are being built elsewhere versus here in California.
Yeah, no, that's so well spoken. And I think another thing for new investors to really understand is what is that landlord tenant law looking like within whatever market that you're going to decide to invest in, because that can make or break you, especially when it comes to, like you said, too much legislation, too much oversight, confusion on what can be done and what can't be done, and the accessibility. And so I think that is a key point for any new investor to really do their research of what is that local law and what is the state law specifically to landlord tenant.
Yeah, exactly. And I think it's one of those things, it's like they're all fighting over keeping tenants in their property and having rent control so no one builds more units versus just saying, we need no more beds, we need more houses. If you do that, prices go down on rental rates. Like, I
Supply
think
and
it's
demand.
common economics, like 101, that I'm like, who's in these rooms? What are they talking about? Why is why is it so complex? And
Right.
I just don't think it should be. And so, hopefully things change. I know that there's a lot of people, smart people here that are hopefully helping work through that.
Yeah, for sure. Okay, so Dana, one of the questions I always ask my guests are what books are you currently reading, or what books would you recommend maybe new investors or people who are starting out on their real estate journey read?
Yeah, so One Rental at a Time by Michael Zuber is one of my favorite books. I definitely recommend that if you want a real estate book. As far as books I'm currently reading, I just finished yesterday, Unicorn Team. And Unicorn Team, it's by Jen something, can't remember her last name. She talks about how to build innovative products. You need a visionary, a strategist, and then and mobilizers to like actually execute on it. And I think it's a great way to think about like why do some businesses grow faster than others and really making sure you have the right strategy in place. So I really like that. If you want just like a fun read. Right before Unicorn Team, I read the book called Billion Dollar Whale. That is a crazy book. It's a real life story about a guy who basically, a Malaysian guy who stole billions and fooled Wall Street and Hollywood. I mean, and it's a true story. You can look it up. You can see the pictures online. He's hanging out with like Leonardo DiCaprio and Paris Hilton, and he almost took Malaysia to bankruptcy
Right.
based on his sovereign wealth fund he was raising. And so I think it's a book about corruption. It's pretty crazy and juicy, but it's also just a reminder on ethics and always to be ethical in everything you do.
Yeah, for sure. No, that's great. Okay, Dana, how can people get in touch with you if they want to learn more about Hemlane or they want to follow you? What's the best source?
Yeah, you can go to Hemlane, HEMLANE.com if you want to try our property management. You can reach out to me also on any social media. It's Dana Dunford, DANA, and then Dunford, DUNFORD.
Perfect. Well, Dana, it has been a pleasure. Thank you so much for joining us. And that wraps it up for another episode of Inspire Wealth. I am Prof M out. And for those who want a more hands-on learning experience, check out our online courses at inspirewealtheducation.com. Whether you're just starting out or looking to expand your investment portfolio, I've created step-by-step guides and resources to help you achieve your financial goals. So hit that subscribe button and let's start building your wealth one episode at a time.